Have you heard of the name Nubank? Hopefully the answer is yes, and if not, this might change soon because this Brazilian startup is disrupting the banking industry in Latin America. With the goal to make banking easier for all, this fintech now has more than 48 million users, and soon might be worth north of $50 billion. But how did Nubank disrupt the banking industry? Join us as we break down Nubank's startup story, their marketing strategy, and how they're planning to become a global brand. Nubank is a Brazil-based financial technology bank that has taken over Latin America with plans to expand into the rest of the world soon. The online bank has absolutely no traditional banking branches and operates through products like the Nu Conta, their digital banking account, along with a no-fee, low-interest international credit card that customers can use directly on their smartphones. The Nubank app allows users to track their transactions in real time, block their card in case of an emergency, apply for a limit raise, contact customer support, and carry out pretty much all kinds of banking activities with the click of a button right from their phones. This has helped Nubank boost financial inclusion in Latin America, where most people do not have access or knowledge of traditional banking methods. So, how did it all start? In mid-2012, Colombian David Velez moved to Sao Paulo after completing his MBA at Stanford to pursue a job as a Sequoia Capital partner. Doug Leone, head of Sequoia Capital, had recruited him to scout startups in Brazil and the rest of Latin America. However, a few months later, Leone called to say that the project was over, due to a lack of promising pitches and computer science graduates in Brazil. While the decision shocked him, Velez had always wanted to launch a startup of his own, and rather than view a lack of Brazilian innovators as a negative, he saw it as an opportunity for himself, with Velez saying in an interview with Forbes that, in the US, there's an oversupply of good entrepreneurs. Somebody with my experience and background is a commodity. In Latin America, there was significant scarcity. Velez identified the need for a convenient banking service in Brazil, where half of the population was unbanked, despite being the world's 7th largest economy. Back then, there were about 5 banks in the whole country, and all of them charged a huge fee with high interest rates on credit cards and had terrible customer service. Velez's frustrating experience with trying to open a bank account in 2013 inspired this idea. After spending nearly an hour waiting at the bank to begin the process, it took an arduous 4 months before it was complete. Velez knew that no matter where he went in Latin America, the process would be the same.
We always say in Brazil that, things are hard, everything is complex, services are difficult to get. And a lot of people see that as a challenge, and I don't want to deal with these companies, and I want to get a cell phone account because it's hard. We actually always saw that as a huge opportunity because everywhere you see frustration, everywhere you see a consumer that is in pain, that is an opportunity for a business to come do it better.
So he decided to solve the problem, all on his own using technology. And so, Nubank was born as an independent digital bank to help the people of Brazil become more financially savvy. He recruited Cristina Junqueira, who held an MBA and possessed years of experience in the banking industry, along with Adam Edward Wibble, an American with a computer science degree from Princeton University, who had spent the first 5 years of his career in consulting and private equity, as co-founders, officially launching Nubank in 2013. Now, Velez had already secured $1 million from his mentor Leone and his former VC partners. Argentine venture firm CaixaBank pitched in with another $1 million. With $2 million in seed funding, Velez, along with his partners, got to work and started developing their first product with the support of a banking partner that allowed them to store their customers' funds, along with MasterCard that provided them with a credit card. Finally, in 2014, Nubank entered the banking sector with their MasterCard-backed credit card linked to their customers' smartphones. This idea was unlike anything the people in Brazil had ever seen before and grabbed their attention. About 200,000 people put their names on the waiting list within the first year, with 100,000 people successfully onboarded. Nubank was extremely careful about the people they onboarded within their first few years, because they were trying not to overburden their system, which would result in a bad user experience. However, they managed to build a method that would allow them to scale their system as their number of users increased. Nubank used the velvet rope strategy in the beginning to attract more customers. This meant that you could only apply for their credit card if a friend invited you. Aside from the exclusivity, this digital bank charged no annual fee and helped the customers make all kinds of transactions through their phone. Really helped Nubank build itself a user base almost instantly. People who qualified for the card were instantly notified through the app. Their iconic purple-colored credit cards would arrive in 2 days, allowing them to do just about any banking activity through their phone. Compared to traditional Brazilian banks that charged an annual bank fees that started at $20 per year, this was a great deal. Want to make stunning landing pages in minutes? With Wishpon's drag-and-drop editor, you can quickly build landing pages that are optimized for mobile. But that's not all. You also get a dedicated marketing team to help design your campaigns and increase your leads. Click the link in the description to learn more about our all-in-one marketing platform. In 2016, just 2 years after their official launch, Nubank hit 1 million accepted credit card customers, almost entirely through word of mouth and referrals. And with the kind of success that the neobank had experienced, in 2017, Nubank received a Brazilian banking license, allowing the platform to offer checking and savings accounts, which automatically increased their user base. Within 5 months, about 1.5 million of Nubank's credit card customers had signed up for bank accounts. In 2019, right before the pandemic hit, Nubank had managed to make $523 million in revenue with a loss of just $78 million. And despite the pandemic, the platform only benefited from the lockdowns as people transitioned from traditional banking to mobile and web banking. This helped Nubank's revenue almost double in 2020 to $963 million, with the losses going down to just $44 million. Considering all of this, Nubank went public on the New York Stock Exchange on December 9th, 2021. The company raised $2.6 billion, with shares opening trading at 25% above the offer price, giving the bank a market capitalization of nearly $52 billion. As a response to the platform's success, Brazil has recently seen a sudden increase in digital banking services, with traditional banks scrambling to launch their own apps, trying to enter the fintech market. The biggest competitor for the digital bank are Brazil's Big Five banks, including Itaú Unibanco, Caixa, Banco do Brasil, Bradesco, and Santander. However, Nubank is currently dominating the fintech market in Brazil and offering features that other companies will take a long time to match. Last year, Nubank acquired a pioneering digital investing platform and rolled out a life insurance product, selling 100,000 policies in the first 2 months. At the same time, the digital bank has also expanded to Argentina, Mexico, and of course, to Velez's mother country, Colombia, to tap into their unbranched markets. But with all this, how exactly does Nubank make money when they don't even charge a fee for their credit card? Whenever you make a purchase through their credit card, an interchange fee is applied through the MasterCard network. At the same time, when you store your money in a Nubank account, they earn interest through those funds. The bank also charges overdraft fees, ATM withdrawal fees, and referral fees, along with offering loans. More recently, Nubank launched a premium credit card called Ultravioleta, which grants customers various benefits for a monthly subscription fee of $49. So it's safe to say that the bank has a diverse range of income streams, even though their basic credit card plan is free. Since its inception, Nubank has raised a total of $2.3 billion in funding across 12 rounds of debt and equity financing, with investors like Sequoia Capital and Berkshire Hathaway believing in the company's potential. Currently, Nubank has a valuation of $30 billion after the company raised $1.15 billion in a Series G, led by Warren Buffett's Berkshire Hathaway. The platform now has 48.1 million customers, including approximately 28% of the population of Brazil aged 15 and above. So, what does the future hold for Nubank? According to official stats, Nubank is currently growing by 41,000 new users every single day, with ambitious plans of expanding its empire into other unbanked regions all over the world. There's no denying the fact that Nubank will continue empowering people financially and breaking the monopoly of traditional banking through technology. In 8 short years, Nubank has gone from an idea born out of Velez's frustration with Brazil's outdated banking system to launching its free app-linked credit card and obtaining a banking license to offer a broader range of financial services. In the process of disrupting Latin America's banking sector, the company has made banking accessible to millions of people and built the world's largest digital bank. That's a wrap for our breakdown of Nubank. What do you think of this and other digital banks like it? Do you think it will achieve its target valuation? Let us know in the comments below. And if you enjoyed this video, consider giving it a share and a big thumbs up. For similar stories, subscribe to our channel and hit the bell icon. See you next time. Until then, bye.